All right, so you know how much we love digging into the minds of successful traders.
Oh, yeah. Always fascinating to see how the pros approach the market.
Right. Well, this time we're diving deep into some audio notes from a guy named Nico.
Nico.
Yeah, Nico. Sounds like he's been around the block a few times, you know? Over 15 years trading Forex, futures, and then he jumped into crypto a few years back.
So someone who's seen the evolution of the markets firsthand.
Exactly. And get this, he's super bullish on Bitcoin.
Bullish, huh? Everyone and their grandma seems to be bullish on Bitcoin these days. What makes Nico different?
Well, he's predicting Bitcoin could hit like $150,000, maybe even $200,000.
Wow, those are some serious numbers. But is he just riding the hype train, or is there something more to his analysis?
Nah, he's not just blindly following the crowd. He actually seems pretty skeptical of a lot of the common crypto advice out there. Like, he's not a big fan of the whole buy the dip mantra.
Interesting. So he's thinking for himself, not just repeating what everyone else is saying.
Yeah, he's all about data, especially on-chain data. He thinks that's the real key to understanding the crypto market.
Ah, on-chain data. That's what sets crypto apart, right? It's like having a real-time X-ray of the market.
Okay, so for those of us who aren't quite on Nico's level of crypto wizardry, could you break down what on-chain data is and why it's so valuable?
You got it. On-chain data is basically all the information that's recorded on a blockchain. Transactions, wallet activity, you name it, it's all there, transparent and accessible to anyone.
So unlike traditional markets, where a lot of the information is hidden or delayed, in crypto, you can see everything happening in real time.
Exactly. And that's a huge advantage for traders like Nico. They can use this data to get a much deeper understanding of market dynamics and make more informed decisions.
Okay, that makes sense. So it's like having a behind-the-scenes pass to the whole crypto show. You can see who's buying, who's selling, how much leverage they're using.
You got it. You can see things like liquidations happening in real time, funding rates which show how bullish or bearish the market is feeling. It's a whole new level of transparency.
Okay, so let's talk about those funding rates for a second.
Sure.
I know they have something to do with leverage, but how do they actually work?
All right, so imagine you're betting on the price of Bitcoin going up. That's called going long. And someone else is betting on it going down. That's called going short.
Right, got it.
Funding rates are basically a way to balance out the number of longs and shorts in the market.
How so?
If there are way more people going long than short, they have to pay a small fee, the funding rate, to those who are short, and vice versa. It helps to keep the market from getting too lopsided in one direction.
Ah, so it's kind of like a balancing mechanism to prevent those crazy price swings that we see in crypto all the time.
Exactly. And that's just one example of how on-chain data can be used to get a real edge in the market.
And Nico is clearly a master of this stuff. He's using it to inform his trading strategies, which we're going to dive into next.
Can't wait. He mentioned 3 main strategies, right?
Yep. Dollar cost averaging, swing trading, and arbitrage, and then the really intense one, high-frequency scalping.
A little something for everyone. But let's start with dollar cost averaging, or DCA. Seems like even Nico finds it a bit ironic that this strategy is so popular in crypto.
Yeah, he actually calls it the rebranding of averaging down, which used to be seen as a big no-no in traditional markets.
Averaging down, like throwing good money after bad.
Pretty much. But in crypto, it seems like DCA has become the go-to strategy, especially for long-term holders. So what's the deal with that? Is it actually a smart move in this market?
Well, in a market that's trending strongly upwards, like we've seen with Bitcoin over the long term, DCA can actually be a pretty solid approach.
So even though it might not have been the best strategy in traditional markets, the unique nature of crypto makes DCA more viable.
Right. It's all about playing the odds. You're betting that over time, the price of Bitcoin is going to keep going up, even with those inevitable dips along the way.
And by consistently buying a set amount at regular intervals, you're essentially averaging out your entry price over time.
Exactly. And Nico seems pretty convinced that with Bitcoin, that upward trend is, well, inevitable. But he also realizes that simply holding Bitcoin might not be enough to maximize profits. That's where his swing trading and arbitrage strategy comes in.
Swing trading and arbitrage. Now we're getting into the more active side of crypto trading, right?
Definitely. This is where Nico's deep understanding of on-chain data really shines. He's looking for those shifts in capital flow between different crypto assets.
So he's like a crypto detective following the money trail to find those hidden opportunities.
That's a great analogy. He's not just reacting to price movements, he's trying to anticipate them by understanding the underlying forces at play.
And he's using on-chain data to do that.
You got it. He mentioned analyzing the relationship between Bitcoin and Ethereum, for example, looking for clues as to which way the capital is flowing.
So let's say he sees a lot of money flowing out of Bitcoin and into Ethereum. What kind of trade might that signal for him?
That could be a sign that Ethereum is gaining momentum relative to Bitcoin. He might decide to buy Ethereum and maybe even short Bitcoin, basically betting that that trend is going to continue.
So swing trading is all about capturing those price swings, those waves of momentum in the market.
Exactly. And on-chain data helps Nico anticipate those swings before they happen. He's not just chasing pumps, he's trying to get ahead of the curve.
Okay, but what about that third strategy he mentioned? High-frequency scalping.
Ah, yes, scalping. Now we're talking about the Wild West of crypto trading.
It sounds a bit more intense than DCA and swing trading.
To say the least. Scalping is all about making a large number of very short-term trades, trying to profit from tiny price fluctuations.
It's like playing the crypto market on fast forward.
It definitely requires nerves of steel. And to pull it off successfully, you need a deep understanding of market dynamics and lightning-fast reflexes.
And Nico relies on his custom-built tool called Maquant for this, right?
That's right. He describes Maquant as a tool that visualizes order flow and incorporates on-chain data.
Order flow, meaning the stream of buy and sell orders coming into the market.
Exactly. It's like seeing the heartbeat of the market.
So with Maquant, he can see in real time what's happening and make those split-second trading decisions that scalping requires.
Yep, and he uses it to spot those subtle manipulations by market makers that he's always talking about.
Ah, yes, market maker manipulation. That's a whole other rabbit hole we need to explore.
We sure do. Because it seems like Nico sees their fingerprints everywhere in the crypto market.
Yeah, he's convinced they're pulling the strings behind the scenes, even if it's all technically within the rules of the game.
All right, so let's get into it. How do these market makers actually manipulate the market? What are their tactics?
And most importantly, how can we learn to spot those manipulations and protect ourselves? Because if Nico is right, and market makers are as powerful as he says they are,
It's a game we need to understand if we want to play it smart. Well, first off, it's important to remember that market makers, they're not like some evil villains, you know?
Right.
They actually play a pretty important role in the market.
Yeah, they provide liquidity, right? So there are always buyers and sellers available.
Exactly. They're the ones making sure there's always someone to trade with. But, you know, as Nico points out, they definitely have a few advantages up their sleeves.
Advantages? Like what?
Well, for starters, they have access to, think of it like this, they have access to information and tools that most retail traders can only dream of.
Okay, like what kind of information?
They see the entire order flow coming in,
Yeah.
you know, meaning they know what orders are about to hit the market even before they're executed.
So they're basically seeing the future of the market.
In a way, yeah. And they use all sorts of fancy algorithms to analyze this data and make super fast trading decisions.
So how do they use this information to like manipulate the market, even if it's not technically illegal?
Well, Nico outlines a few tactics in his notes. One is they can widen the bid-ask spread.
Oh, the bid-ask spread?
Yeah. You remember, that's the difference between the buying and selling price of an asset.
Right.
By making that spread wider, they can basically pocket a larger profit on each trade.
And so how does that affect regular traders like you and me?
Well, it can lead to something called slippage.
Slippage, I've heard that term before.
Yeah. So let's say you're trying to buy Bitcoin at a certain price, but by the time your order actually goes through,
Yeah.
the market maker has moved the price up just a tiny bit.
Sneaky.
Right. You end up paying more than you expected, and that difference, that slippage, goes straight to the market maker.
So it's like they're rigging the game in their favor, even if it's not technically cheating.
Yep. And another tactic Nico mentions is triggering stop-loss orders.
Ah, stop-loss orders.
Remember, those are designed to protect you from big losses by automatically selling if the price drops below a certain point.
Right. It's like a safety net.
Exactly. But those clever market makers, they can kind of figure out where a lot of those stop-loss orders are clustered
Oh, no.
and then push the price down just enough to trigger a whole bunch of them.
So they're causing a mini flash crash just to buy up all the cheap coins that people are panic selling?
You got it. And once they've loaded up on cheap coins, guess what? They let the price rebound and profit from the fear they created.
That is cold. It makes you wonder if it's even possible to outsmart these guys.
Well, Nico seems to think it is. Remember, he built his own tool, Maquant,
Right, Maquant.
specifically to see that order flow and try to anticipate what those market makers are up to.
So he's fighting fire with fire.
I guess you could say that, yeah. The idea is that by understanding how they operate, you can spot their patterns and adjust your own trading strategies to avoid getting caught in their traps.
Okay, so it's not really about beating them. It's more about...
It's about understanding the game well enough to play it safely and profitably.
Right, right. So this kind of makes those three strategies Nico was talking about, the DCA, the swing trading, and the scalping, even more interesting, right?
Yeah.
Because each one is kind of like a different approach to dealing with this whole market maker situation.
Exactly. Each one has its own strengths and weaknesses when it comes to navigating those choppy market waters.
So like with DCA, you're kind of taking the long view, right? So those short-term manipulations might not affect you as much.
Yeah, you're more focused on the overall upward trend, not sweating those little bumps along the way.
But if you're more of an active trader, you've got to be more on your toes, right? Like with swing trading and arbitrage.
Right. That's where understanding on-chain data becomes super valuable.
Yeah, you got to be able to spot those moments when the market's out of whack and try to capitalize on those inefficiencies.
You're basically trying to find those opportunities created by market maker activity.
You're not just reacting to it.
Exactly. And then there's scalping, which is a whole other beast.
Yeah, scalping seems like the riskiest game of all.
It is. You got to have nerves of steel, lightning-fast reflexes, and a really deep understanding of market dynamics. Nico's tool, McQuant, helps him see that order flow in real time.
So he can react instantly.
Exactly. He's trying to outmaneuver the market makers on their own turf.
It's like a high-speed chess match, but with millions of dollars at stake.
Right. But even with all the tools and knowledge in the world, scalping is still incredibly risky. One wrong move.
And you could be wiped out.
Yep. So for someone just starting out in crypto trading, do you think they need to build their own McQuant to have a chance? I mean...
Yeah, that's a good question.
it sounds like it would be pretty complicated.
Right. It sounds like a lot.
Well, the key takeaway here is that knowledge is power.
Knowledge is power.
Yeah, the more you understand about the crypto market, how it works, the better equipped you'll be to navigate all the complexities.
So even if you're not a tech genius who can code your own trading bot, you can still learn to read the market signals and make informed decisions.
Absolutely. That's what's so exciting about crypto. It's a constantly evolving space where anyone who's willing to learn
can potentially succeed.
Exactly.
All right, so before we wrap up, I think it would be helpful to circle back to on-chain data.
Yeah, good idea.
Because Nico seems to think it's crucial for any serious crypto trader.
He's not wrong.
So can we break it down one more time? What are the key takeaways our listeners should remember about on-chain data?
It really is like having X-ray vision into the market.
X-ray vision, I like that.
Yeah, you can see things that just aren't visible if you're only looking at, just price charts.
So it's more than just like, okay, Bitcoin went up or down today.
Right. It's about understanding why those price movements are happening.
So it's like having that extra layer of insight.
Exactly. Like you see the price of a certain coin suddenly spike.
Right.
Is it because there's genuine demand? Or is it just a bunch of whales manipulating the market?
Yeah, the classic pump and dump.
Exactly. And on-chain data can help you figure that out. Well, you can look at things like the number of active addresses on the network.
Okay.
The transaction volume. How much crypto is actually changing hands.
Right.
And the size of the transactions. Are they mostly small trades, or are there a few huge ones driving the price action?
So you can kind of get a sense of whether the price movement is organic.
Or manipulated, yeah.
Okay, that makes a lot of sense. But for someone who's, brand new to all this, where do they even begin to explore on-chain data?
Yeah, it can definitely seem a bit intimidating at first.
Right, it's a lot of data.
It is. But there are a ton of resources available online, like websites like Glassnode and Coinmetrics.
Okay, I've heard of those.
Yeah, they offer a wealth of on-chain data, and a lot of them have free tiers that are perfect for beginners.
Oh, that's good to know.
Yeah, so you can dip your toes in without having to pay a bunch of money.
Right.
And once you've got the data, then it's just a matter of figuring out how to make sense of it all.
Which is probably the hardest part.
Well, yeah, it can be. But my advice is to just start simple. Focus on a few key metrics that are relevant to your trading strategy.
So, like, if you're a long-term holder, you might want to track different metrics than someone who's day trading, right?
Exactly.
Yeah.
Like a long-term holder might be more interested in things like the network's hash rate,
okay,
which is a measure of how secure the network is, or the number of long-term holders, which can indicate that more people are confident in the asset's long-term potential.
Makes sense.
While a short-term trader might be more focused on things like the funding rates we talked about earlier,
right,
or the open interest in derivatives markets.
Okay, so basically just be selective and choose the data points that are most meaningful for your particular style of trading.
Exactly. It's
Yeah.
all about finding the signal in the noise, right?
Yeah. Don't get overwhelmed by all the data out there. Just focus on what's important for you.
And even if you're not like a hardcore chart analyst, just having a basic understanding of on-chain data can really help you make smarter decisions.
Yeah, like Nico was saying, it's all about being data-driven, not just following the hype.
Right. Make rational decisions based on actual evidence, not just, what you read on Twitter.
Or what some random influencer is telling you.
Exactly.
Well said. So I think that's a great place to wrap up. Nico's journey from traditional markets to, the cutting edge of crypto trading is really inspiring.
It's pretty amazing.
He's shown us how to use on-chain data to gain a real edge, and he's reminded us that in the world of crypto, knowledge really is power.
Absolutely. Anyone can thrive in this space if they're willing to learn and put in the work.
Well, that's all the time we have for today's deep dive. Thanks for joining us.
It was fun.